for the first time, can you please introduce yourself? Let's meet you. Let's know where you are joining from. Let's do that in the less than a minute. Please write on the chat box where you are joining from. Okay, I remind you our class note. Our class note is contained in a video lecture prepared by Starry. This video lecture encompasses all the topics made in the syllabus. And don't forget that the syllabus is new. So you are working with a new syllabus. We changed the title of this course from Advanced Audit and Assurance to Audit, Assurance, and Forensic. Please take note that our video lecture is made available for you. It contains the in-depth in-depth explanation and materials that you need on each of the topics. Coming to class today, we are reviewing topics that is expected of you to have completed in the previous week. If we follow the video lecture, the blueprint stated by Starry, it is sure that you finish the syllabus before your exam. So I encourage you to go along with us. If we mix any class, the recording is always there for you to check, and let's be on point together so that we don't miss any aspect of the syllabus. We are doing it together, okay? Right. If you do not have the video lecture, please, this contact I'm displaying right now, please copy it, write admin, request for the video lecture, either call or chat, okay, on WhatsApp. The admin is there, will attend to you, okay? All right. Last week when we had our class, I told you already the topic you're supposed to prepare for. So today we are going to review the topics. Let's see which area you still need more explanation. We are starting now, but let's remind ourselves the guideline. It is another class, so I encourage every one of us. I know we are busy, but let's try as much as possible to be focused in this hour. So please, if you are joining through your phone, minimize distractions. You can put your phone on do not disturb mode, close unnecessary apps and social media that may distract you and can also distract us. As you are joining, please don't forget to mute your mic. If you have not done so, please check mute your mic on the call so that you don't interfere with us and we don't interfere with whatever you are doing. Okay, let's engage fully in the class. Let's interact. Don't hesitate to ask any question anywhere you have doubt. Okay, let's do a quick recap. It's good to do a quick recap. This is our fourth week. Last week, if you were in class, which I want to assume all of us were, can anyone give us a summary of what we discussed last week? I mean, the topics we discussed in the class last week. Anybody, please? You can either write or mute yourself. If you are not in class, let's know. You can write that you are new, okay? Anyone, please, just a sentence. What do you remember we did last week? Okay, Madam Mary, can you unmute yourself and help us?
Okay, last week. Well, good evening, everyone.
Good evening.
One of the things I can remember we talked about last week was the rights and duties of auditors. We talked about powers of auditors as well. I think you mentioned something about one of his powers to include power to receive copies of all resolutions, power to speak at the shareholders meeting concerning the shareholders. Um,
Yeah.
okay.
Yeah, you
And
tried.
then you also referred us to Kama.
Yes. Yeah, thank you. Thank you for being attentive in class. You really tried. So last week we reviewed a topic on the ethical principles of an auditor. So the rights and duties that you have, the principles of objectivity, independence, confidentiality. I can give you the power to have access to the company's books. However, you owe the duty to keep the information that you have confidential, except is a law that permits you to do so. So we also look at the issue of confidentiality and money laundering. So what you are supposed to do, we treated them last week. If you were not in class, we have closed that chapter. We were not in class, that means you have to do double work. Please go to the video lecture, read on ethical principles as a chartered accountant, ethical principles of the profession itself worldwide, not only about Nigeria. So the beer we mentioned about karma is that the principles generally, but when it comes to country, there are some countries' law that you have to also abide. Okay, if you were not in class, please go to the video lecture. We have treated that topic, so that you don't it seems as if we have not talked about it. We have talked about it. Please go into the video lecture and study it. We are going to continue. I'm displaying again the contacts to reach out to get the video lecture, right? So that is by the way. Today's topic, we want to look at professional responsibility and liability. Professional responsibility and liability. This is a topic that uh we are going to review today. On the video lecture, you will see this topic on episode 19, chapter 4, part 1, professional responsibility and liability. Also, episode 20, chapter 4, part 2, professional responsibilities and liabilities. So why is this important? This is important because you will be able to identify and explain the nature, the purpose of laws, regulations, standards, codes in the context of assurance engagement. And you'll be able to evaluate and explain how audit may fail to meet users' expectation. Also, I should at this stage, you should be able to apply the provisions of ISA 240. To get most from this lesson, make sure you've watched the video before, and that's a recommendation. However, if you have not done so, as we are reviewing the topics today, maybe it might look uh cumbersome, it might look theoretical, it might look somehow. Just take note of the topics. You take your time after this class to study it in details, because this is just a review class. Is that clear? That part is clear. Can we continue? Can we continue? Last week, I remember that I stated ahead that the topic we are treating today, so I expect that we have gone through it, either one or two things we have gone through it. Audit, advanced audit and assurance is similar to audit that you did during the skills level. However, you are going to be doing application. So most of what we'll be dealing with are case studies, because now you are assumed to be a professional, so you should be able to tackle real life issues. So let's start with auditors' liability and expectation gaps. When we say expectation gap, is there anyone that is new about that? Then expectation gaps in audit. Is there anyone that is new to this word? Are we familiar with what expectation gap is?
Yes,
Great.
I'm familiar with it.
Yeah, thank you. So how do you explain the elements of audit expectation gap? The expectation gap in audit. How do you explain it?
Okay, can I talk?
Of course, please.
Okay, when you talk about audit expectation gap, it's simply talking about the difference between the primary role of an auditor, what an auditor is actually supposed to do, and
Mm-hmm.
what society expects the auditor. You know, the primary role of an auditor is not to identify faults or errors in a financial statement. The primary role of an auditor is to express whether the financial statement is of a true and fair view.
Mm-hmm.
However, in course of doing that, an auditor could detect fraud. But in the society sees an auditor as its responsibility is to primarily find out fraud. So that expectation gap is there because that is not the primary role of an auditor. However, in course of your auditing, you could identify certain things, right? But that is not the expectation primarily. But because of the societal, expectation, it now brings about the gap. So
Mm-hmm.
that's what I can say about audit
Yeah,
expectation gap.
you are right. You are right. Any other opinion? Yes, you are right, because the gap that when we say the gap, it looks like the loophole. There are two people there, the auditor going, just like a police officer when you call for when you make a distress call. Police know what you're supposed to do, but we, the masses, we be saying this is what we expect the police to do. Same in audit profession. So in the audit gap, we have three elements of audit gap. What's some of audit gap? So we have the standard gap, the performance gap, and the liability gap. Elements in the expectation gap. So we have the standard gap, the performance gap, the liability gap. Each of these, they sum up to, if you are saying the expectation gap, you should know which area the person is accusing the auditor from. Yeah, when you look at liability gap, we are saying that the the lack of understanding about what the auditors is liable for, right? The auditor is liable to some responsibilities, to some duties charged by the standard. Meanwhile, the public, just like you said, the public want to put all the liabilities, whatever happens, on the auditor. So how do you close this gap? We look at it, but when you say liability gap, that when something happens, and an auditor, you should know this, and you should prepare a safeguard. Know that there is a liability gap in your job, so you should prepare a safeguard to close it. If you don't know the liability gap, you might assume some liabilities that are not yours, and this liability in audit profession can be expensive. For example, you are being charged, a shareholder is charging the auditor for, because a bank closed in Nigeria recently, maybe Fidelity or something. Fidelity Bank closed and I lost a lot of money. So a shareholder might rise up and say, hey, I'm charging you for this. So there should be the basis at which you are charging the auditor. The auditor is liable, is responsible for negligence. Negligence to what? So this must be stated clearly in the engagement. So the consequence of this is when you are writing an engagement letter, you state clearly what you are liable for. In nowadays, auditors put disclaimer when they get some kind of engagement, so that they will not be charged, they will not be held responsible for some kind of issues. There is also a performance gap. A performance gap because there could be a perception that audit work, that the audit should perform to a certain extent. In audit, especially when you're auditing a big organization, it is difficult to have 100% audit testing. So that is a performance gap. That is, people expect you to see everything. An auditor cannot see everything. So it must be stated. And that is why your report covers what you have done, the area that you touch, the techniques that you use. All these things must be documented in order to close this gap. There's also a standard gap, that is, people are blaming the standard that is guiding auditor, that is the standard, the international audit standard is not effective enough. If because the auditors work with this standard, the standard is not effective. That is why the standard is always undergoing review to close this gap. So the consequences of expectation gap. Consequences of expectation gap. Okay. Anyone can help us on the call. What now we have described expectation gap. We have described the elements of expectation gap. So what are the consequences as in the practice that auditors may face in terms of these gaps? Anybody? So what the consequences are possible for auditors in the course of his engagement? Anyone? The consequences of expectation gap. Any idea from anyone? Please, let's speak out. Let me know what you know. Let me know what you do not know, so we can move faster. The consequence of expectation gap. Okay, to save the time, if this expectation gap is high, you do not try to close the. You are not expressive enough in your engagement letter. In the public, there could be high level of distrust, between the users of the audit report. People don't rate that audit firm high again, because all of the time they are saying you do not do this. So it must be stated clearly what I should do, what the auditor should do, what the auditor should accept. Because if there are too noise about a particular audit firm, imagine you hear that, hey, KPMG audited a company and they discovered the company is being used for money laundering. If there is an headline like that, you can imagine the kind of uh a reputation drop that could happen to KPMG because of that headline. So it concerns auditors as well, because it's going to be discredit to the profession, and the audit firm might also lose its reputation in the public. So it concerns the auditor. So another area is incorrect decision by users of audit report who base decision on incorrect premises. If a such headline goes out for KPMG to redeem the image, do you know amount of what they will do? They will pay content creator a lot. They will do a lot of publicity to create that to correct that impression in the mind of the people, for them to trust KPMG again. You can imagine. So it concerns auditors, it concerns the profession itself. That is why they try to uh, be expressive. They are encouraged to follow the standard and state the standard. In most of the reports, they don't just write that the financial statement is true, is this, but they state clearly, expressly what they do. So this implies that you do not have to bow under any pressure. If there are some threats to your fundamental principle, you just have to seek help and find a safeguard. If you bow under any threat, the liability will fall on heavily on the auditor. So this is it. All these ones are linked together. So you know what you are being open to and getting any engagement. High rate of litigation due to the perceived negligence of auditor can also occur. People can just charge auditors anyhow. That this is the auditor should have done it. They did not follow the right standard. Lawyers that can read a lot, people can engage lawyers. The auditor failed to do this part of the standard, all these ones. So how do you close the expectation gap? Now that we know, how do we close the expectation gap? There are how many? There could be some, yeah, a lot of ways to close the expectation gap. You see, audit is practical. If you just follow through, be a critical thinker, you can pass audit. It's easy. We have explained now what audit expectation gap is, in what form can it happen, yes, and the consequences. Now, as an auditor in the house, how do we close this expectation gap? You don't necessarily need to read this part. Let's think about it. Madam Mary, how do we close expectation gap?
Okay, I feel like you said when you were trying to explain it, the misconception, which is as a result of, let me say, lack of communication, clear communication. I think effective communication should be there in order for the public to know what actually is expected of an auditor, so that there wouldn't be any kind of misconception that would bring about the gap. So there should be a clear communication as to the auditor's responsibilities.
Yeah. So the communication should be clear in the engagement letter. Somebody once asked that the engagement letter, who's supposed to write it? Is it the client that's supposed to write it or the auditor? I received such a question. So what do you think? Engagement letter, who's supposed to draft it? Is it the client or the audit firm? Okay, please. You have the
If
floor.
I'm correct, I think it should be the audit firm who is engaging you because they're engaging you and then you have to sign. Because the moment you sign, it becomes, I don't know, the moment when you're given an employment, you're being given an offer letter, right? And then inclusive of it are the things that are required of you. So I feel the moment you endorse your signature and respond to them, I think you've accepted the engagement thing. I don't know, that's just my opinion.
Yeah, I understand. Any other opinion? Let's look at it this way. An auditor is being engaged by a client. Indirectly, the client is employing the auditor. So, if you relate it to employment, a company wants to employ a staff. The company drafts the offer, the condition of employment. But in case of auditor, we are saying should it be auditor that should write the engagement letter? Let's think about it. It's not the book. The book might be wrong, and let's be critical. Let's think critically. Any other person, please. Let's unmute ourselves. Let's talk. This is an open question. I'm trying to drive a point. This is not the it's not the subject where you're trying to do, but I'm trying to drive a point. Please, can you unmute yourself and talk? What do you think? What is your opinion? Should I start calling names? Abdi Malik,
Good evening, ma'am.
Alaji Abdul Malik, can you please help us? What do you think?
The auditor is supposed to write the engagement letter
Why?
because he would have to state clearly the scope of engagement and the scope of work he will be doing with the company.
Yeah. Okay, I just want to cite your opinion. Yes, you are right. The auditor should write the engagement letter, but if it can be confusing that why should the auditor is what has been employed. So the reason, one of the reasons is because of this expectation that we are treating today, right? And the auditor have to be clear in their communication. The client is not a professional. The client might be an engineer, and their focus is different. So to close the expectation gap, it must be clearly stated by the professional. In this way, you will open the understanding of your client. You are a master in this job. State clearly what you are capable to do. So anything you draft in that engagement letter, you are using your right to write your responsibility you can carry. So in this regard, you can argue that the auditor, right, the engagement letter, and one of the reasons is to find a way to close the expectation gap. Thank you for your contribution. So another way to close the expectation gap is, we talked about the standard gap. So the control at the international level, IFAC, at the local level, Ican, the control of the audit profession is important. Let it be open that this profession is regulated. This profession is being controlled as a whole. So no one can do anything outside the profession. That is why the ICANN is a body, a professional body in Nigeria that monitor the compliance of audit firm in the conduct of the audit exercise. Okay, and the auditor also the profession I can try to carry out audit inspection across audit firm that is registered. It is ensure that the audit firms are registered. The audit firm are also, they have the resources that is expected of them. Please read more on the ways to close audit expectation gap. Okay. Now, the next question is, why is professional skepticism important in audit or financial statement? Anybody? Why is professional skepticism important in audit or financial statement? All right, please, Madam Mary, you have the floor.
Okay, I am sorry. I want to start. I want to respond based on what I learned in a case study where we were taught of professional skepticism. as having a questioning mind, not being over reliant on information. Now, because you're working with management, it's not all the information they bring to you you're going to just accept. You're going to, you need to investigate. You need to query those things. You need to be sure. You don't just rely based on, okay, it's management. I think they could be correct. So being professional, being um, sorry, sorry, I'm trying to gather my thoughts. So it just has to do with you not being over reliant on the information given to you. As an auditor, you need to find out, you need to see those things for yourself where necessary, and then probably give a report based on what you could see. Thank you.
Yeah. Thank you. Any other opinion? All right. You are right. You see, a professional skepticism is an attitude that every auditor should have. It's an attitude, like a skill that every auditor should imbibe. So it's just an attitude that doesn't trust until you verify it. You see it yourself and you scrutinize. Scrutinize system. Do not accept things the way they present it to you. I'm looking for this word in English. So it's the attitude that enhances the auditor's ability to identify and respond to conditions that may indicate possible misstatement. If you have this kind of attitude, you will not be complacent with situations. I'll give an example. There's this company that I used to audit. The company used a software, I think they use Sage. So when they submit the financial statement, we see, I think that was, okay, the company is a government parastatal. The company, I mean, the government parastatal use IFSAS, is guiding them. Before introduction of IFSAS, so they put in the retained earnings some amount of money. Every year we look at it, what is this amount? They will say is system generated. We vouch for every item. Is anyone saying anything? Oh, please mute your mic. Madam Wura, can you please mute your mic if you are not talking? See if I can control it here. Thank you very much. So the company states, oh, it's computer generated, and this has been like first year the same computer generated. We try to maneuver it. Second year computer generated, and of course it's increasing. So the attitude of skepticism made like, how would computer generate a figure? Computer is garbage in, garbage out. Let's investigate. The accountant of the company is computer generated, and he compared this amount to the figure. It does not make sense. It's just irrelevant. Let's just overlook it. There are a lot of issues to deal with, right? So if you are complacent, you accept it. But I can tell you that when we started to investigate, it wasn't computer generated. They were shocked to see the cost of that amount, and the amount is, we're still going to get it into it in account debit, and if you have a problem on the debit side, if you accept it, the problem is also affecting the credit side. And the way the accounting is, if you are patient enough to investigate the reason for zero difference, if you are investigating zero difference, you discover that zero is not the only difference. It's just the net that you are saying. So don't accept, as an auditor, you don't accept a situation as it comes. You investigate, you want to see with evidence, because you are working with evidence. You want to support your report with evidence. So as a professional, it is important that you imbibe that attitude of skepticism. It influences your trait. It is part of a motivation, and it also shows your competence level. They know that, hey, this auditor, when it comes, whatever, wherever you are, whatever you're hiding, this auditor will unravel it. It shows the dedication and the skills you have built so far in auditing. So to achieve this, the training experience are very important. Audit firms themselves have an important role to play in cultivating a skeptical mindset in auditors. It includes designing and implementing policies, procedures that promote an internal culture, recognizing that skepticism is an essential attitude in performing audit engagement. All right. Any question at this point? Are we still together? Okay, you have a question, please?
Yes, ma'am. Please, I want to be clear on these points you just talked about professional skepticism.
Mhm.
What is it under the ways we can close the gap, or is just a sub topic on its own?
It's a subtopic on its own. Yep. Are you clear?
Thank you, ma'am. Thank you.
Mm-hmm. Exactly. Are we good to go? On it, don't forget that we just a review, but you have to study more on it. So don't limit yourself with what you talk about in class today. It's just a review, an eye opener to study more on that. So can we continue? Okay, now let's look at the ISA 240. What does it say? ISA 240. ISA 240 is provide a guideline on the auditor's responsibility regarding to fraud in the audit of financial statement. You know, at the beginning of this slide, we are saying that the auditors is expected to do something while the public expects the auditor to do something else. So in case of fraud now, what is the responsibility of auditor? We are saying, oh, it is the management that's supposed to detect fraud in an organization, fraud and error. So what does the law say? What does the standard says? So that we want to see. That's what we want to look at. Fraud and error. Similarities, differences. What can you say about it? Fraud and error, are they the same? Are they similar? I know we know it, so I will not waste time about it. Fraud and error, they are not the same. Fraud is criminal. It's a criminal offense, an intentional offense. You are intended upon investigation that this is an intentional practice, a fraudulent practice to maybe to falsify the financial record, a financial report, to falsify the documents in order to achieve a goal. Or you intentionally misapply a provision of a standard or misappropriation of assets intentionally. However, error is seen that, oh, it's a mistake. Everyone can make mistake. But if the mistake is beginning too much, you can see it as error. So in essence, both error and fraud should be minimized. A window for error can lead to fraud. Is a loophole that's supposed to be closed. It is clear now that it is not the auditor that is responsible to detect fraud. It is not the auditor's responsibility to prevent even error. The management of the company, when the company submits financial statement, it is their responsibility. Knowing this, you should take note in your engagement report. Now, the smart audit firm now, when they are submitting financial statement, audited financial statement, there is a page that is dedicated to auditors, the acknowledgement of auditors' responsibilities. So, the management responsibilities. So, maybe page 4 before the auditors report, the auditors, the management state their responsibility and how they have been able to manage their responsibility during the year. So, it is the responsibility of the management to prepare financial statement that is true and fair. It is the responsibility of the management to prepare financial statement that reflects the activity during the year. Okay, therefore, it is, they are the one when you're really management is has taken the responsibility to prepare financial statement that is true and fair. So they should have instituted systems that prevent fraud and error, both of them, and they should have instituted control system that will detect fraud if anything happens. So auditors now, as an auditor, what are you supposed to do if the management has detected and prevented fraud? What is your responsibility and what is the concern of auditor about of fraud and error? The auditor is responsible for reporting on it as the third eye, as the third party, to make the report that, oh, the management is responsible for detecting and preventing fraud and error, and they have done so. The financial statement shows true and fair view of the financial position of the company. And because the volume of transactions sometimes, the auditor is only concerned with fraud and error that have material effects on a true and fair view. As a result, the auditor should determine what error and fraud, what level of error and fraud can impact the true and fair view of the financial statement. So that is where the auditor is concerned. You should determine what error. It is the auditor's concern, and it is the auditor's job to determine itself what level of error, what level of fraud can affect the true and fair view of the financial statement. Based on this, it builds the skepticism in the auditor, because they know they have the responsibility to report on the financial statement, to attest that financial statement is free from error and fraud. So they have to be skeptical in all areas. They have to have it in mind that error and fraud is possible. So any evidence they are receiving, if they're asking questions, they ask questions with the mindset that error and fraud is possible. That is the correlation with fraud and, I mean, skepticism and this ISA 240. Now, if you have this kind of mindset, now let's not link it with the expectation gap. You know what is expected of you, right? You know what is expected of you to do according to standard, what you are liable to, right? As an auditor, you can build it will help you to develop a kind of threshold. You'll be able to stand to your responsibility at any time that you are being challenged, that you are expected to do this. In this way, you are able to close the gap at any point, because you are aware of your duty to obtain reasonable assurance that the financial statement as a whole are free from material misstatement, whether caused by error or fraud. So material misstatement can be caused by error or fraud. The activity of the auditor can also deter or close the window of fraud. Upon investigation, you can open the attention of the management to area where fraud is possible. Of course, it is not the responsibility of the auditor to detect it, but through your work, you can act as a deterrent to fraud. Auditor may also discover error or fraud during the course of the work, but they are by no means That is not their focus. When they detect it, that is why when the auditor detects fraud and error, they don't correct it. What do? They call the attention of the management to it. They do not, auditor do not correct the error. When they discover fraud and error during the course of the audit, they are by no means certain to do so whenever error or fraud has occurred. So when they see, they call the management. They take note of it, that we are seeing this error of so and so. So in that, they are auditing the management as well, that you have not done what you're supposed to do. These are the loopholes that we find. And if there are any errors that affect the true and fair view, they have no option but to do what? To report it. Okay, so let's look at auditors' procedures where fraud is suspected. Auditors' procedures where fraud is suspected. I think this part, in a way, could be asked in the exam. You don't need to cram. Audit is practical. Just put yourself in the shoe of an auditor that you want to audit someone. What are the procedures you need to put in place? You already know that it is not a responsibility, but what you are supposed to do concerning audit, concerning fraud and error, you know. So what are the procedures you need to take where fraud and error is suspected? So I will state 2. Please be attentive, and we continue. We can contribute to it and make it 5. Is that good? Yep. So the step that you can take, number 1, you auditor can identify the extent and possible impact on the financial statement of fraud and error. Don't forget, we are looking at the procedures, that is, step or actions to be taken where fraud is suspected. Where fraud is suspected. Number 1, identify. When you suspect fraud, identify the extent, the impact of that fraud that you suspect on the financial statement or of the client in that particular year. Once you identify the extent at which it can affect it, then you will know what to do at that point. So when events happen, for example, you suspect that this sales, withholding tax receivables account is too much for that year. When you compare with the previous year, it's too much. It's high, right? It brings suspicions that it could be an error in that aspect. Then you think you should know the impact that it can have when the receivables goes up, or there is error in the account receivables account. What other account can it affect as an auditor? You should know, right? So when you understand the possible impact on financial statement, document the fact in the audit file. Additional testing is required to establish what you are suspecting. Okay. Next one is consider the possible impact on other areas of the audit and overall assessment of audit risk. Our time is fast spent. Let me see what we need to do. Any other question? Do you have any question? Oh, we need to look at auditor's liability. Is there any question? There's a relationship between professional skepticism and fraud. I think I've tried to mention it before, but please go study it again. So the last one, I'll just talk about the auditor's liability. What is auditor liable to? The audit, there are 2 liabilities. They have criminal liability and civil liability. Auditor can be charged for criminal liability, also for the civil liability. So example of when auditor may be criminally liable include when he accepts appointment as an auditor under a statutory provision without being qualified to act. As we are a student now, we are as a chartered accountant in baking, just a step to become a chartered accountant. Okay, acting as an auditor, you open an audit firm, is a criminal offense. It could be charged in court. Another instance is where auditor is found to be involved in fraud. It's possible the auditor could be part of a fraud. The auditor, because you like the company, that is why ethical principle of independence is very, very essential. Because you like the company, you want to help the company to reduce tax, you help the company to falsify accounting document. It's also a criminal offense. Okay, where the auditor is found guilty of insider dealing, where the auditor is found guilty of insider dealing, that is, you use the information of the company, of a client, to your advantage. Yes, that is the insider dealing, and the auditor could be charged for it because you are given the law gives you the right to access the information, but you are not supposed to use it to your advantage, right? So let's look at the civil liability. Civil liability. The example of civil liability, we have the contract law and the law of tort. An auditor may face legal claim for losses suffered as a result of negligence. As a result of negligence, the society can charge the auditor for negligence during the audit. That is carelessness. The auditor is found to be careless. A company has a contract with external auditor for provision of services. It can therefore sue the auditor for breach of contract if the auditor is negligent in carrying out the terms of the contract. Now, the final question I want to ask, I've mentioned the auditor could be liable under civil law, civil liability, and criminal liability. So what's the difference between this? Civil liability and criminal liability. What's the difference? Do you know the difference? This difference between criminal liability and civil liability. Okay, please take note and let's work on it, right? Take note of it and work on it. It's going to help you to understand it better. All right? Any question for me?
If you can explain this too, I think I'll be fine.
That's why I asked. Let me see if there is time because it's I'll just explain it briefly, but please don't take note of it to study it later. What I can say is the criminal liability arises from maybe if you violate a criminal law. I have said that the audit is being guided by some laws. If you violate any law, so you could be prosecuted. But civil liability, when you have a contract with your client, it becomes civil and you break that contract. For criminal, you are violating the general law such that even Ican can sue you, right? Alpha can sue you. They can revoke your license. That is criminal. It's just like the general law. But civil liability, you break an agreement between you and your client. So that charges could be brought, you could be charged by your client. Your client is charging you for releasing the evidence or the document, confidential information of the company. This is between you and your client. You might, if the client charge you, you pay penalties. It does not still affect you. You can still engage another client. It's just that the client will not have a relationship with it. But if it's a criminal liability,
you are facing a child with the Ican, the professional body is suing you because you have violated the law that give you the permission, that give you the license to act as an auditor. Is that clear enough? I think that should be fine.
Yes, it's clear.
Yeah. So the criminal liability, you are violating the law of the state can sue you, the law of the profession, they can sue you. But the civil liability, you are violating the law that bind you with your client. Okay? Any other question? We have 3 minutes left. Any other question? Are we good today?
We are good today, but let's have the next topics.
Great, I will do that. Thank you for reminding me. So let me do a quick summary of what we did today. Today we look at the auditors' liabilities and expectation gap. We look at the element of auditors' expectation gap. We saw 3: skepticism, importance of it in audit or financial statement, the fraud and error ISA 240. We've treated it. Please go and study it in details. Auditors' liability, we look at the please study professional indemnity insurance. These are ways to reduce liability of auditors, right? You see, the auditor can be liable under criminal law, under civil law. So those are the things we did today. Let me check the topic for next week, quick one. And we have assignment today. Our assignment last week, how many people attempted it? Nobody, right?
Ma, let's be dropping the assignment on the general page now, so that we'll
We
be remembering. Go ahead, try remembering what the assignment was. I couldn't. If
you
you
did
can
not
be
check
dropping
it.
it.
Is
Well,
there? Is there? I usually send it to the group. I've sent the topic for next week as well. The assignment is usually dropped there. So let's see today's assignment. Today's assignment is simple. Outline the objectives of auditor in relation to fraud. State the procedures auditor should perform to identify risk of material misstatement due to fraud. Simple. The assignment, I usually send it to the group. Let's submit it 13th August. Yep. Right. This is the link to submit it. I will send all of them to the group.
okay, ma.
Yep. It's there right now. Next, we will look at what are we talking about next? I've sent to the group anyways. Management practice. Management practice. If there's no question, so thank you for coming today. Let's come again next week.
Hello, good evening, ma.
Good evening, sir.
Thank you very much, ma, for your effort. Yes, ma. On the membership site,
Okay. The class has ended anyways. You are just here. Anyone that has question can stay behind. The class has ended. Thank you for joining. Please, can you ask your question? Oh, he left. Sorry. Okay. You can write on the Telegram. I will check it. Thank you for joining tonight. We meet again. All right. Bye, everyone. Till next week.